On Friday, the Dow Jones jumped more than 1,000 points. Oil fell off a cliff. Brent crude dropped below $90 a barrel, a 16% collapse from its peak in just 2 days, after Iran declared the Strait of Hormuz completely open for commercial shipping. Energy stocks bled. ExxonMobil fell sharply. Chevron dragged on the Dow's rally. Valero Energy dropped 8.6%. The headline story wrote itself. War risk fades, oil supply returns, and energy names pay the price. But something odd was happening in a different corner of the market. NuScale Power surged more than 40% this week. Oklo climbed 6%. Nano-nuclear energy rose 5%. On the same day that oil was crashing on peace news, the nuclear sector was posting back-to-back rallies. The White House announced a nuclear energy plan. NiSource signed a power agreement with Alphabet. NiSource also expanded its existing deal with Amazon. Two scenes played out simultaneously. The oil peace trade sent crude lower. The nuclear trade sent reactor stocks higher. These two moves looked unrelated. They were not. The Iran conflict lasted long enough to matter. During the weeks the strait was under threat, oil rose above $100 a barrel. Gas prices climbed to a national average of $4.17 a gallon. A senior Federal Reserve official warned the conflict could spark a lasting price shock. The Iranian war revealed something investors had known intellectually but had not fully priced. The energy grid supplying America's AI data centers runs through one of the world's most politically volatile choke points. This is the hidden connection. The oil crash did not make nuclear irrelevant. The oil crisis made nuclear urgent. AI data centers require electricity on a scale that existing grids cannot reliably supply. The crisis crystallized that dependency. Alphabet and Amazon are not signing power agreements with NiSource because oil got cheap on Friday. They are signing because the past several weeks demonstrated what a supply shock does to operating costs and planning certainty. Microsoft opened what it called the most powerful AI data center in the world this week. The company simultaneously extended a data deal with Stellantis. These infrastructure commitments run on decades-long horizons, not on the current price of Brent crude. Bank of America has called the coming opportunity a nuclear renaissance. Oklo's first reactor is scheduled to achieve a self-sustaining reaction by July 4th. The White House nuclear plan boosted Cameco and Centrus Energy alongside NuScale and Oklo. These moves did not happen because of peace. They happened because the war made the need visible. The oil shock also accelerated a parallel shift. China's renewable energy and EV stocks lifted on export hopes tied to the same energy price shock. Europe saw the Iran war drive nuclear planning in hard-hit Asian and African markets. The disruption created the argument for the alternative. The Hormuz reopening resolved the immediate crisis. It did not resolve the underlying problem. The weight of evidence points toward the nuclear and clean energy build-out continuing regardless of where oil settles. The AI power demand driving these deals is structural. It does not reverse when Brent crude falls to $88. Alphabet's data center power agreements, Amazon's expanded NiSource deal, and Microsoft's Wisconsin facility are all multi-year capital commitments. They were not made because of a temporary oil spike, and they will not be undone by a temporary oil drop. That said, the 40% single-week surge in NuScale and the broader nuclear rally carry a real risk. Valuation has run far ahead of operational milestones. NuScale missed earnings estimates badly in February. A $507 million accounting hit from an expected milestone payment sent shares down more than 30% before this week's recovery. The company reports again on May 7th. Oklo's July 4th reactor milestone is the next hard test. If either event disappoints, the stocks that moved 40% in a week can give most of it back in a day. The verification benchmark to watch is NewSource's next quarterly disclosure on data center power capacity commitments. If Alphabet and Amazon are accelerating their contracted gigawatts, the thesis holds regardless of oil prices.
If those contracts slow or are delayed, the nuclear rally was a sentiment trade, not a structural shift. The final tension. The strait is open today. It has closed before. Iran's government has said the reopening is permanent. Prediction markets and at least one Federal Reserve official are not fully convinced. If the strait closes again, oil returns above $100, and the entire energy grid fragility argument gets louder. Nuclear stocks would likely rally again, this time with more institutional conviction behind them.